Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, we're facing up to Brexit. The UK is reshaping its place in the global economy after voting to leave the European Union. How will it affect the rest of the world, though? We'll find out what matters most for the world economy beyond Brexit. That means places like China, Europe's biggest trading partner. There are currency devaluations to think about and the chance of risks to China's growth outlook. And what about here in the Middle East? Oil, the dollar, the competitiveness of the GCC economies. Is there even a chance Gulf states will have to rethink their tax-free status? So last week it was the referendum result no one saw coming. This week it's been all about adjustment, and not just for the UK and Europe. The post-Brexit world has got a little bit of something for everyone. No doubt it's the British economy and businesses across Europe which are facing the long period of uncertainty. This UK vote to leave the EU has turned many things on their head. But financial systems seem to have weathered the storm. Sure, the markets were on a rollercoaster ride for a few days, but there hasn't been a real crisis of confidence. It also now seems pretty clear that central banks in the UK, the US and the Eurozone will be keeping their interest rates lower for longer. The Bank of England, for example, gave a clear signal it may cut rates after the vote. And the European Central Bank even held an international forum in Portugal on the future of monetary policy. In his first major speech since the UK referendum, the ECB chief Mario Draghi spoke of, quote, persistent headwinds from overseas and called for policy cooperation between global regions.
The relative stance of stabilization policies will differ across countries depending on cyclical positions, but the sign of the effect on global demand needs to be positive.
Well, we've got a number of guests joining us this week to take us around the post-Brexit world, starting with economist and energy expert Cornelia Meyer in Zurich. Cornelia, nice to see you as always. So one of the things we really want to get into is the effect of monetary policy, because it's already loose. It is likely to stay that way now. Tell me where you see central bank movements going in Europe, in the United States. How will they take us through the rest of this year and beyond?
Well, I think what will happen in the US, we were waiting for 2 more rate hikes. I think we will see at best 1 rate hike. And you saw the ECB, they have flooded the market with money again. They had to do so because it was a crisis moment on Friday. But what that means is, yes, we'll have loose monetary policy, and we have to ask ourselves, do we want to bankrupt the insurance industry? Do we want to bankrupt the pensions industry? And what happens to savers, especially in fast-aging societies where you probably would like to have, savers be able to get revenue from the saving? These people will be pushed into ever more risky asset classes.
And that's not a picture we really want painted, is it, Cornelia? So what do we... Well, I'll put it this way, if that's going to be the monetary policy, what else do governments and central banks need to do to almost offset it and keep the economies and people safe in that environment?
Well, I think what they will argue is they need to do this in order to keep things safe, because, it's the banks were really badly hit, and lots of other companies would have been badly hit. And so this Brexit will probably have a ripple effect in the UK. I think we will see a technical recession, Q4, Q3 or Q4. In the rest of Europe, we'll see slower growth, and that's just not good for the world economy. So we will stay in this low return, low growth environment that we really need to get ourselves out of.
Currencies, Cornelia, take me through that, because aside from the pound taking the absolute hammering that it did, and stabilising now at a lower level, there is also strength in the dollar now. How does that play out and affect other economies?
Well, I think there's two things. You have strength in the dollar. You also have strength in the yen. You know, they flee to the safe havens. And for the first time since the Swiss Central Bank decided in January 2015 to get rid of the peg to the euro, or the floor to the euro, Switzerland is seen again as a safe haven. When currencies appreciate, that's generally not good for trade, and that's generally bad for jobs in the manufacturing era.
Okay then, so we have talked through the United States, we've talked through Europe. Take me through the Middle East as well, because maybe not so much from the Brexit situation, but again, I think we're talking about monetary policy and the potential knock-on effects from that. Middle East.
I think from the monetary policy situation, from the knock-on effect, if we see slower growth, that will not bode well for oil prices. And, a lot of especially GCC economies like lower oil prices. When it comes to, a lot of the GCC economies want to diversify away from only being oil into manufacturing, agriculture, all sorts of things. And for that, you need good trade agreements. It will be for the next few years probably hard to get Europe to focus on trade agreements with GCC. It will be probably easier to deal with the British, because the British will be happy for every friend they can get, because right now in Europe they have no friends left.
Oh dear. Can I actually just pick up on a point you made about Middle East economies? The UAE is starting to develop an airport tax. It's also looking at value-added tax as well. That's that diversification you were talking about. And if the Gulf states are doing that, then, yeah, they're taking this pretty seriously now.
Well, I think, and that's a very, very good thing. And you see that, for instance, in the Kingdom of Saudi Arabia, that they're getting rid of some of the subsidies. It's getting much more expensive to buy petrol, which is a good thing. They probably have to start, and they will start, charging for electricity, because if you get things for free, you don't value them and you waste them. So in that sense, it's probably a good thing, and it's a good thing to start slowly but steadily get people used to taxes. It may be less important for places like UAE or Qatar, where you have, a big expat community, which is larger than the domestic, the indigenous community. But for places like the Kingdom of Saudi Arabia, Oman, where you have a big population, it's important to get them, weaned off the thinking that the state will take care of all, and that understanding that you need to do something for country as well.
Cornelia Meyer in Zurich. Pleasure talking to you as always. Thank you so much for your time.
Thank you very much indeed.
So that starts taking us around the world and gives us a taste of the global impact. But of course, the emphasis comes back to places like Brussels, inevitably. EU leaders held a special summit there to take stock of the UK's decision to leave the bloc. The first meeting without a British representative, and it was made clear there would be no special treatment. Jonah Hull brings us more on that.
This is what Little Britain looks like. And this is Little Spain. Here's Little Germany. And yes, it's Little France. There's even a little protest outside the Houses of Parliament. Though these days the howls of protest are all too real. This is, of course, mini Europe in the heart of Brussels, the display of the nations and cultures of the European Union. And here, the fact that one of those nations has voted to leave is being keenly felt.
Now, of course, I'm very, very sad about that, because I think together we are stronger, of course.
It was a historic day on which the leaders of the EU met for the first time in 40 years without a British Prime Minister present.
We are committed to mastering the challenges of the 21st century as 27 member states. We point again to the historical importance of the EU, but also towards the necessity of giving people prosperity and security.
The message to London was unambiguous. When exit negotiations begin, they will be tough and there'll be no concessions.
I've made it crystal clear today that access to the single market requires acceptance of all four freedoms, including the freedom of movement. There will be no single market à la carte.
And finally this, Scotland's First Minister, welcomed after the others had left by the EU's most senior official. Nicola Sturgeon wants to secure a place for Scotland in Europe. But that will require seceding from the United Kingdom first. It could, though, mean that at least part of this installation can remain.
OK, then off to the proper-sized UK now, London, and Andrew Kenningham, senior global economist with Capital Economics. Andrew, let's deal with the UK economic effects. Do you feel we are getting any sort of possible clearer picture about what the future holds? You know, the ratings agencies made their downgrades, the employers talk about moving staff out, the markets were all over the place for a bit. Is there any clarity?
No, I mean, I think that's the big problem, is it's very unclear what's going to happen. It seems that the Brexiteers had not got a concrete plan as to what they were going to try to negotiate with the rest of the EU, and it's not very clear what the rest of the EU wants either. So that's what's really been disturbing markets and businesses. What we have heard is a lot of business leaders saying it's crucially important that the UK remains within the single market. And I think if it becomes clear over the coming months that that will happen, or that we'll have an arrangement very close to that, then I think the UK economy should not be too badly affected.
OK then, so let's really widen things out here, Andrew, and look at monetary policy, obviously in the UK, but in the region too. As I've said to my previous guest, Cornelia Meyer, it seems that the central banks will be keeping their rates lower for some time longer now. How does that change the outlook? What do economies need to look at? What do they need to look out for in this sort of monetary environment, which was already loose, but is going to stay that way, it seems now?
Yeah, that's right. The main impacts will clearly be felt in the UK. We now think that the Bank of England will probably cut interest rates, perhaps in July or August, by 25 basis points, and then keep those rates at that level for the foreseeable future. Certainly any talk of rate rises has now been shelved. And the ECB, which was already likely to ease policy by extending its QE programme, may even step that up a little bit. So the overall global monetary policy environment will be looser. I don't think, however, it's going to have a big impact outside Europe. The Fed, in particular, shouldn't be too much affected once the dust has settled. I mean, the UK is quite a small trade partner for the US. The US is quite a closed economy, and it's recovering quite well, and inflation pressures are picking up. So we still think the Fed may actually raise rates before the end of this year.
OK. There would be, though, would there not, an impact on emerging markets? The more you ease the monetary policy in the West, the more impact it would have in emerging and developing markets?
Well, it can have mixed impact. So if the policy is loosened in advanced economies, you can get a surge of capital flows into emerging economies, causing currencies to appreciate and creating some problems. But on this occasion, because there's been some degree of withdrawal of funds from risky assets in general, if anything, we've seen emerging market currencies weaken. Although I should say those impacts have not been huge. So outside emerging Europe, so some of the countries which are even within the EU, like Poland and Hungary, I don't think the Brexit effect will be very substantial in the long run. We have already seen markets bounce back over the past 2 or 3 days, and in many cases, equity markets and currencies are now already 1 week on above the levels they were at before the referendum result.
Exactly. This is the point I was going to make with you. There was, with the shock of the Brexit result, there was all sorts of panic on the markets and currencies. I mean, we saw the pound absolutely fall off a cliff when that happened. But markets fix themselves, don't they? I mean, they've done it quite quickly here as well. Does it make that panic look a little bit overblown, or is this, just a basic reminder of how the system works?
Well, yes, it's both. I mean, it was probably overdone in many ways. It presented what people would call buying opportunities in some equity markets. The long-term effects will be, I think, on the pound, which, as you said, has dropped. It's stabilised now, but I don't think it will come back to where it was, 2 weeks ago. And on long-term interest rates and monetary conditions. But if you look beyond that, I suspect that equity markets and currencies elsewhere in the world won't necessarily be massively affected.
All right, Andrew Kenningham with his view there from London. Thank you for that, Andrew.
Yeah, you're welcome.
And still ahead on Counting the Cost, Russia. No doubt it was hoping for Britain to leave the European Union. We've got the view from the Kremlin a little later on. First, though, what does Brexit mean for China? At first glance, you may say not much. Chinese exports to the UK account for only a tiny portion of its GDP. But the EU is China's biggest trading partner, so it's interesting then to see just what has been going on in Beijing. At the start of the week, the People's Bank of China devalued the currency, the yuan, by the largest amount since August. The government was clearly concerned the EU economy would also be hit. For Beijing, its close relationship with Britain guaranteed it an, shall we say, enthusiastic cheerleader within the EU. So now it's lost one of its closest allies within the trading bloc. And if the vote turns out to be a blow to further globalization, that could also hamper China's desire to counter its slowing growth at home. Remember, it has vowed to reform its state-owned enterprises and tackle dangerously high levels of debt. Ruben Montajar joined us now from Hong Kong. He's a professor at City University of Hong Kong. Ruben, quite a week in Europe. Why don't you start, though, by telling me about the impact of the Brexit decision in Asia, in China, but the immediate reaction?
Okay, good that you mentioned that word, because I think to talk about this topic, we have to classify immediate, proximate, and remote. So I think the immediate will be just like anybody else, you know, the Dow Jones going down and the pound. So there will be an initial knee-jerk negative reaction. It's simply because this is a quite very testy time in which, like, the referendum resulted in practically almost even result, 52 versus 48. So therefore, there's this expected reaction, which for sure it's negative for everyone, including the European countries themselves. Now, I would say the proximate is, you know, Britain has prided itself to be a center for manufacturing, apart from all those things that they do well, education, finance, and services, as I already mentioned. But because of this, what I would call the proximate situation, for example, President Xi Jinping of China going there and receiving a very warm welcome from the Brits. And then also, you know, Britain was the first country to join the AIIB, the Asian Infrastructure Investment Bank, to the chagrin of the US. And because of that, other European countries also joined in. So therefore, Britain kind of gave itself as the platform through which countries like China and Japan should engage the European Union countries, which are now expanded, right? We know there are 28 countries now. But then we have also seen that this manufacturing and platform that was given to China and other countries like Japan, and even like they have this billion pound project on nuclear energy production, which will be taking place in Britain. So these are the ones that we will have to watch.
Okay. Can I take the regional view with you a little bit more, Ruben, seeing as you're there in Hong Kong? And maybe you can explain to our viewers any potential impact of Brexit on China, on its relationship with Europe. For example, would China be willing to carry on so much with its internal reforms when there are monetary policy changes afoot?
I don't think Brexit is going to be a key point in that reform of China. You see, the whole Europe is down. So the strategy of China will really be including what they will do with Britain out of the European Union. But I don't think they will be influenced simply, or they will change their strategy just because Britain is out of the European Union. China has quite good relations with Germany and also with France. So, you know, Britain is just, you know, one cog in this big picture of reform in China. So it's not going to really be, you know, a black or white or a doomsday scenario just because Britain is exiting. So I don't think that is the situation. So I would say that Yes, that's why I tried to clarify that there is some immediate and there's proximate and there's remote. Because in the end, China thinks of dealing with the whole Europe and the whole West. They're not just thinking of dealing with Britain. Britain is number 5 in terms of economy size. It's not really that crucial. So that is, I think, the feeling in China.
Well, seeing as you say China's got a lot more concerns to worry about, why don't you briefly tell us what is at the top of that agenda at the moment? As you say, there can be a little panic when the markets go crazy like they do, or like they did. But I guess it's really more about any fundamental issues in China which it's worried about.
No, the most important for China now is the geopolitical issues. That they are so afraid that they will be treated like a diplomatic international leper because of what they're doing in the South China Sea. So you have the whole European Union, the United States, the G7 countries all lined up against China's behavior in the East China Sea and in the South China Sea. This is the most crucial thing in the mind of China. They're trying to rally the General Assembly. They claim that they have in their hands 45 countries, and these 45 countries, only 3 countries have really said that they are aligned with China. I think this is the most important thing that is in the minds of China now. You look at their newspapers, a daily barrage of talk and articles on this issue. Brexit has become like, except the first day, now there is like 3rd, 4th, or 5th. Even in today's page, this is not even in the first 2 pages. So it's not really the most important thing in what China is doing at the moment.
Okay, Ruben Mondejar in Hong Kong. We thank you very much for your time. Now, what about Russia? President Putin thinks the Brexit result is a concern for the global economy. Just don't suggest he was supporting the Leave vote. Rory Challens has the view from Moscow now.
Perhaps it's fitting that as Brexit was throwing Europe into existential turmoil over the weekend, Vladimir Putin was shaking hands with Xi Jinping. Russia has turned to China as its European relationship has soured. But the UK's referendum, says Putin, was a domestic decision for the UK alone, and he criticised those suggesting the Kremlin supported a Leave vote.
Statements made by Prime Minister David Cameron before this vote, where he spoke about Russia's position, do not have any grounds and never did. I think this is nothing else but an incorrect attempt to influence public opinion in his own country. But as we see, this didn't have a desired effect.
But watch state Russian TV and a different picture emerges. This is Dmitry Kiselyov, often called the Kremlin's arch propagandist. On his prime-time Sunday news show, he stuck the boot in.
Britons are a brave nation and they are the first to be out, but there is a line behind them. Brexit is a turning point in the EU history. It means that the climax of the beautiful utopia has been left behind.
And this analyst thinks Russia's leaders would certainly prefer a UK outside the EU, where it can't magnify the voices Russia finds troublesome.
It has special relations with the United States, so it's translating American policies inside the European Union more than any other member. And secondly, really, the British government is listening more than others, probably, to the fears and to the fears of Eastern European partners.
Another plausible strand to this theory is that the EU is just too big, too messy, too democratic for Moscow. It would prefer either a Europe with a power structure that's vertical, like Russia's, or a Europe as it was in previous centuries, fractured, competitive, with its countries more available to bilateral relationships. Indeed, there are other EU countries with parties calling for their own Leave referendums. France's National Front, for example, which has received loans from Russian banks. But the financial turmoil and renewed slide in oil prices unleashed by Britain's historic decision also presents problems for Russia, not to mention Russian businessmen with financial interests in the UK. As Vladimir Putin acknowledges, Brexit's impact has both positives and negatives.
Yes, but one of the negatives was a pretty big one for British people, the fact that under the Brexit scenario, they would eventually lose their EU passports. Now, we know about the idea of searching your family tree for an Irish granny so you could get an EU passport that way. But interestingly, the tiny island state of Malta also showed up as an option. There, it was possible to buy an EU passport for around €1 million. That was the price of Maltese citizenship and therefore access to the wider EU. No surprise, though, the EU quickly closed that loophole. It now says you'll have to spend at least a year in Malta in order to qualify for that scheme. And that is our show for this week, but there's more for you online at aljazeera.com/CTC. That'll take you straight to our page with individual reports, links and entire episodes for you to catch up on. You can also get in touch with us. You can tweet me at KamalAJE. Do use the hashtag AJCTC when you do. Or just drop us an email. Counting the Cost at aljazeera.net is the address. That is it for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.